To remain updated with the latest business news, click on the bell icon.
Hello and welcome to Business Today Television. I am Siddharth Zarabi and you're watching Budget with BT, our special programming on the upcoming Union Budget for 2022-23. With me today, a very special panel of guests to discuss India's economy, the prospects of growth, and the dark clouds of Omicron that pose a threat to the ongoing recovery. Joining me today, Kaushik Das, Chief Economist, India at Deutsche Bank, Madan Sabnavis, the Chief Economist at the Bank of Baroda, and Mr. R Gopalan, the former Secretary of Economic Affairs in the Union Ministry of Finance. Welcome to the show. Let me begin by asking you, Kaushik, about the key priorities that you see in the emerging situation as far as Finance Minister Nirmala Sitharaman is concerned. She's already had several rounds of meeting and the key budget numbers are being shaped up even as we are speaking. What are your key expectations from the forthcoming budget?
Hi, Siddharth. Thanks for inviting me to your show. This third wave that we are talking about, it doesn't come as a complete surprise. In fact, for the last few months, we've been always kind of fearing that there will be a third wave at some point of time. We just didn't know that it will come through the form of an Omicron related variant. But, the cases have started increasing. And I think, these cases will keep on increasing and probably will peak at some time during February. So this particular third wave obviously will have some effect on the budget formulation. And as far as expectations are concerned, this fiscal year, we have set a fiscal deficit target of 6.8% of GDP, which could go up to 7% because the government has announced more spending in the last month. From there, we would expect that next year they would set a fiscal deficit target of something around 6.5%. Because you would need to support the economy for a little bit longer period of time. We have had a lot of fiscal support in the last 2 years, but given the third wave, we would still need more support. There are two other aspects related to the budget formulation, the challenge, the delicate balance that the finance ministry will face. One is supporting different stakeholders of the economy to ensure that demand is supported. But in a way that it doesn't stoke inflation. Inflation is also becoming a big concern worldwide, and India also we've seen inflation remaining above 5% on an average for the last several months. So how do you form a budget which supports the economy but doesn't cause inflation? And in that way, the government has been supporting capital expenditure. So I would expect capital expenditure to remain strong, and that should create a multiplier impact. And the third aspect is how do you finance that fiscal deficit? How much do you borrow from the market? Does it cause interest rates to increase? Then whether RBI can have to come and buy again bonds. So those issues will come up. So it's a very delicate balance. So I would say we are going with 6.5% of GDP worth fiscal deficit with some bit of support, targeted support for different stakeholders who need the support at this point of time.
Kaushik, what you're saying is continued targeted support and a reduction, even if by 30 basis points on the fiscal deficit. Madan, let me come to you on that before I go to the former policy maker on the panel. Madan, you heard Kaushik, and I would want to begin my question by asking you, given what has happened to the recovery and given what now seems to be happening with the third wave, and we'll all pray and hope that it passes by very, very quickly without causing any major damage. Do you think it's time for the government of India to target a reduction in the fiscal deficit, or should it continue at least from the current year's point of view?
No, I think, Siddharth, as far as the government ideologically is concerned, I would tend to believe that they would be looking at lowering the fiscal deficit ratio, something in the region of 5.5% to 6%. Now, I think the critical factor will really mean that will depend upon what happens in the next 15 days, whether there are lockdowns and curfews which are imposed for a longer period of time. Because we should remember that a critical part of our economy, the services sector, was something which was getting back on its feet. And I remember during October, November, we were quite euphoric, thinking that the pent-up demand has come into services and it's only looking upwards from now onwards. So it all depends upon what the center, the states, the municipals, the panchayats do in terms of lockdowns, because that could actually push back growth. And if that happens, the entire concept of the budget is going to change, because you will need to continue to spend money on relief, because I don't think the states have the wherewithal to spend on relief. So that particular component will have to continue. But knowing the government, the way in which it has behaved in the past, I think moving along the fiscal path will be a priority. And I think side by side, there will, of course, be this entire saga of disinvestment, because I think that's something which has not yet played out. We're not quite sure if it's going to happen by March. So I think fiscal deficit, capital expenditure, disinvestment, these are the three main things which would be on the agenda of the FM under normal circumstances, which will continue to be even this year. And in case of lockdowns being imposed beyond, say, January 7th, which I think looks very much likely to different measures, then I think the government will have to peg away at certain relief expenditure. Of course, there will be this conundrum about how revenue is going to increase, because we know if there's a lockdown, automatically there will be a hit which is taken by both the center and the states, and there's GST compensation, so on and so forth. But that is something which they will definitely keep up. So I think the compromise may probably be on the fiscal deficit ratio, but definitely I think 5.5% to 6% is what we will be looking at. Maybe 0.25 more, maybe a compromise in case there are further lockdowns in various parts of the country.
Madan, one very quick point before I go to Mr. Gopalan. Do you think it's time to be ideological? Ideological in the sense that India was perhaps the only major economy where the central government, the government was conservative during the pandemic last year, and the Reserve Bank let loose the monetary tap. Do you think it is time to be ideological or be more pragmatic?
No, but I would say, practically speaking, I look at the government as being ideological. So therefore, I think they're going to move on this path, because when conditions were tough, they chose to follow a kind of a fiscal path which wasn't giving too much of freebies, help the poor, let the rich, enable the rich to get back on their feet. And I think that's the policy which they will pursue. There's no reason for them to change things now. I don't think they will do it, even though we can say that it should ideally do it. But I think practically speaking, I don't think the government is going to say, look, let me stick to 6.8 or let me go to 7.5% fiscal deficit and get us out of the rut. I don't think that is the path which the government will choose.
Mr. Gopalan, you've been part of several budgets. You've been right in the thick of it. I want to ask you, do you recall any other time during your long career, including especially in the Ministry of Finance, where in a matter of 3 weeks, practically, the scenario seems to have changed, the estimates seem to be changing, and more importantly, expectations and the animal spirits that drive any economy, they have been impacted in a very short period of time due to the third wave. And what Madan said in terms of the ideology and the very concept of the budget changing, do you think that is what is actually playing out inside North Block right now?
Well, I would say that, this is the third wave is something which is something which we have never seen. This kind of an interruption in the budget preparation process. So we start the process 2 months before. So the numbers we start, getting into, and we finalize expenditure at least a month before. So then it's about the last month when we look into various other issues which crop up. But this kind of a Omicron kind of a third wave did not hit us at any point in time during my budget preparation. So this is something very, very new. As far as philosophy is concerned, yes, we had grappled with some problems at some point in time about when the 2009 crisis, when we were trying to whether to continue with the benefits which we are giving for reflating the economy, should we continue with that or not? That was something which kept on for quite some time until the last about 25 days. But barring that, I don't think we ever had this kind of a issue. And philosophy change, it's just not possible, because once you start laying down the philosophy for the budget, which is about 2 months before, it's not possible to change the philosophy unless you have some very, very critical and important happenings which have taken place and which requires resources to be diverted elsewhere or resources to be put into some other place. then that's a different issue. That has never happened in my time.
Mr. Gopalan, one quick point. What kind of budget would be ideal in the current economic situation? We still need to support growth. We need to do much more for job creation. And there is obviously inflation that's also been inching up gradually.
Look, I mean, all these are very important aspects to be looked into during this budget. But inflation is slightly a different thing, except on the supply side, where we try to do something to ensure that the supplies, I mean, are not prevented from happening by any other method, any other means. That is something we'll be very cautious about. So supply side enhancement is something which budget should do based on the programs and promotions they do through various departments and various institutional structures they prepare or they create at that point in time. So these are all things which can happen through the budgetary process. Otherwise, inflation is something which is a different phenomenon, I mean, altogether. But the budget also has a philosophy on what do we do? I mean, do we look at the inequality? Do we look at the consumption improvement at this point in time? Or do we see that the export infrastructure which is required to be beefed up to take advantage of at this point in time when exports can really, I mean, go up? These are all things which are looked into, and I think by this time all those things will be under the belt, and they would have had extensive discussions and then created a few openings for that.
Well, clearly it's not an easy exercise for the mandarins in North Block. Kaushik, coming back to you, it's very clear that one of the key possibilities at this stage, and once again I'm saying this with the hope that it doesn't pan out like that, but if we head towards more restrictions on economic activity, inflation is possibly going to respond in a way which will be positive, but not given the circumstances. What do you expect from a macroeconomic point of view, given the situation now? And I know it could change 2 weeks later, but I'm still asking you to give us a forecast.
No, Siddharth, you hit the nail on the head. And I started by saying the budget has to be such a way that it supports growth, but it doesn't stoke inflation too much, because at the end of the day, if you have inflation, it hits the poor the most. So you're giving with one hand and taking from the other if inflation goes up by deflating the real income. So you need to be careful of how you decide to spend the money. So the government has been, stressing more on capital expenditure. In this year, the capital expenditure is up 30%, the budgeted number, 5.5 trillion. So I would expect the government to put more emphasis on capital expenditure even in FY23, because that also has a big multiplier impact as far as job creation is concerned. And the center will also push the states to spend as much as possible on capex, because we know that the state capex has more multiplier impact on creating jobs. So I would assume that the targeted support, the demand-driven support, will only be given to the needy and people who need relief, not for the entire, economic class. So they'll pick and choose where they need the most, and then the major thrust will be on capital expenditure, both from the center and state. And if you look at the budget numbers for FY21, the first wave, then when what we had, our total fiscal deficit was actually close to 14%. We keep on talking about just the center, but you have to add the states, and the states
Absolutely.
were close to 5% of GDP. So my inflation forecast is 5 to 5.5% for FY23. And this year also, FY22, it's supposed to be 5.3%. So we are having a scenario where inflation is unlikely to come below 5%. And you know that RBI's target is 4%. So we are looking at a scenario of inflation being 100 basis points or 150 basis points higher than RBI's target. And if you have a supply shock because of this supply disruption, like we saw in the second wave during May, it could happen that inflation could be on the upper side of the range, close to 5.5%, and sometimes going to 6%, rather than staying within the 5.5%. So it will take some time to bring inflation back to the 4% target, and that's why the budget has to be, striking a delicate balance to ensure that inflation doesn't move beyond that threshold 6% mark.
Madan, we are yet to see crude respond in a meaningful way. In the recent past, there was, of course, something that happened early on in December. Given that and given the current domestic supply scenario, the food and vegetable scenario, some of the sticky points when it comes to domestic inflation, food inflation, which is politically sensitive, we have 5 state elections. What kind of priorities do you expect on that front from Nirmala Sitharaman?
So actually, I believe that the budget can do little to influence inflation. Okay, we're having elections coming up. We know it's a politically sensitive issue, and definitely it affects everyone. But if you look at it practically speaking, if you look at the way what is causing inflation today, if you look at all the food products, which is maybe 45 to 50% of your basket, I don't think the government has any control over what happens to the prices of cauliflower or onions in the market. If you look at non food products, if you look at anything concerning oil, we've seen that the Brent price is again started moving upwards. That's a concern. And I think even though we have seen the central government reducing the excise duty by 10 rupees, I continue to pay 110 rupees for petrol even before and after in a city like Mumbai. So I don't think prices have come down. And given the fact that there is this uncertainty again about what could be, restrictions coming on account of this third wave, it's quite possible that again the government revenues will get affected, and it will be convenient for them to continue to make sure that petrol, diesel become good sources of revenue for the government, both center and the states. And if you look at the other products which we're looking at, I think there's been a lot of correction which has taken place in terms of global commodity prices, raw material prices going up, so prices have gone up, services become more expensive, and most of these services and commodities, they run on the MRP concept. So when the MRP goes up, it really comes down, even in case there's a correction in prices. So therefore, I think the budget cannot really address issues of inflation. Just I also believe, I wouldn't like to get this into a discussion that even the RBI cannot control inflation. You can react to inflation, but RBI policy cannot bring down prices of onions or tomatoes, but that's exactly the situation which holds also for inflation. So I think the finance minister is going to just stick to this particular agenda. And I think contrary to what Kaushik is saying, I think that I look at a budget more in terms of an account. It's a kind of a balance sheet and profit and loss account of the government. We should not be expecting miracles to come from it. A lot of that expenditure is committed. You pay interest, you pay subsidies, you pay salaries. I think expecting a lot of it from the budget probably may not be, it may be a bit too carrying things too far. I think the capex number is of course important, and that 5.5 lakh crores can become 6 lakh crores, 6.5, but definitely not more than that. So even though we are talking of a number of around 35 lakh crores as the size of the budget, ultimately at the end of the day, the government, what is going to influence growth, what we're talking of, is going to be this 5.5 lakh crores of capex.
Mr. Gopalan, one of the key points that I heard recently from the policy making establishment is that the Modi government does not believe in instant budgets. And this was in response to a question that I had posed my interlocutor about what are the kind of priorities that will be dictated by big elections like Uttar Pradesh. Now, you handled all of those. That's why I'm asking you this question. Since by all accounts, there are no instant welfareist budgets that have been presented by the Modi government. Directionally, do you see political reasons also weighing in a please all kind of a budget, which also provides some further boost to the campaign in battleground states like Uttar Pradesh?
Well, I don't think so. This is not a general election. This is a state-specific kind of elections. 1, 2. Most importantly, what do people look at in the state? They want good governance, prices down, and a law and order, and all your other government, seva, whatever they do, they are all, done seamlessly without much of a problem. And general corruption in administration is done. These are some of the issues which these people really want in the state government. So much of it is state-specific. But on the prices side, obviously, the state government can always say the center was responsible. But as Madan has indicated clearly, what is that the central government can do on the inflation except increasing the supply so that the prices really go down is something which we need to look at. So that they can do if they can reduce the taxes on import taxes on materials like edible oils and the pulses and those are some of the things they can do in the budget. But at the same time, we have been not looking clearly at what kind of institutions we should have to ensure that they are able to deliver these things to the public at least cost, prices. That is something which we have not, looked into so much in the hullabaloo of budget making. But that is an area which I think government should look into and see that they are able to address this problem. But most importantly, a budget cannot influence state elections, as I mentioned. But budget is a foundation which is laid for a uh, long-term growth prospects of the economy, and therefore on investments on infrastructure or investments on any other human infrastructure creation, correcting some of those which are already there by various means which can be fiscally done, and laying out certain policies which will enable through the budget and spend some money on that, so that people are able to appreciate, and then the delivery at least takes place in a meaningful way. These are some of the things which budget should attempt, and I'm sure this budget will certainly attempt some of those things. That's my hope.
Right. Kaushik, from a revenue point of view, and all of you have reminded our viewers that ultimately the budget is basically a balance sheet exercise. From a revenue point of view, how do you expect the government to end this year? I ask you on the basis of what has been happening on the direct tax collection front, including even the number of returns that has been filed, and we have seen GST collections also go up. Minus the third wave, what's your sense as far as revenue is concerned, and will that provide the government some basis to spend more in the next financial year?
So Siddharth, our calculation suggests that this year, revenue collection this year, as in FY22, the year that will end, revenue collection would be about 25% net of what government has already spent on additional. For example, the GST compensation cess has been given without borrowing from the market. So you would expect the increased revenue kind of funding that GST compensation cess. Then the excise duty cut that was done, that was also, 50,000 crore that, was kind of the revenue loss that the government suffered because of that excise duty cut. So 50,000 crore plus 1.6 trillion GST compensation cess that has come from the increased revenue. Even if you take that out, then revenue should still be 20-25% up on a year-on-year basis for FY22, which is a very good number. Fiscal deficit could have been lower, but you know that last month the government decided to increase the spending by INR 3 trillion. So that's why I'm saying the fiscal deficit for this year will remain constant at 6.8, or it can slightly go up to 7%. Next year, our assumption is that nominal GDP growth would be about 13%. So about 7.5% real GDP growth. And if you add 5% or 5.5% inflation, 13% nominal GDP growth. So you can get to 15-16% revenue growth on the back of that nominal GDP growth of 13% even next year, despite having a 20-25% increase in this fiscal year. The things that we need to look out for, one is disinvestments, as Madan mentioned. So if LIC IPO doesn't happen this year, obviously next year LIC and BPCL will give huge, revenues to the government. Or probably we could have LIC finishing this year, and then next year we'll have another pipeline of disinvestments. And, the GST collection, you're seeing that every month we are tracking 1.3 trillion. So maybe 1 or 2 months we could be on the lower side. But from next year, we could see again, GST collection probably moving higher. So there would be revenue support. Only thing is, how do you spend in such a way that the support goes to the people, those who really need, and you have a multiplier impact through the capital expenditure. And capital expenditure from the government side can actually, prompt the private sector to also come and join in the capex, because they haven't invested for a long time. So we are hoping that in FY23 you'll see private sector capex also coming in along with the government push for expenditure. Just one last point I want to make. Mr. Gopalan said about execution. The government has announced a number of schemes in the last 2 years, including asset monetization scheme, the PLI schemes. I would not expect the government to keep on announcing new schemes. The best action would be to implement whatever has been announced, and there is a huge pipeline. And even if you execute 70-80% of that each year, I think you will have enough revenues to fund the expenditure needs to support growth at about 7-7.5% in real GDP terms.
Madan, one of the points that's also true about the current year, a year when markets were at historic highs, is that we haven't seen much versus expectations on disinvestment. And of course, the Great Indian IPO, as we are calling the proposed LIC IPO, if it happens in this financial year, will add. Otherwise, it is probably going to spill over to next year. There's also the national asset monetization pipeline, for which we saw an announcement, and we are still awaiting concrete next steps in that regard. Do you think that side of the government's ambitions as far as disinvestment and the broader sense of government getting out of areas where it shouldn't be has not really worked despite the markets being at historic highs?
No, I think this has been a problem all through for disinvestment, because I think whenever we're talking of disinvestment, and I think this time the number has been really high at around 1 lakh crores, what we're expecting from LIC. It's all a case of timing and getting the right price. I think that's always been a controversial issue for the government, and that's one of the reasons why things move very, very slowly. And I think the decision-making process needs to be sped up. I think that's the only way in which you can do it. And ideally, I would tend to think that the right way to go about it is that in the beginning of the year itself, one has to announce saying that on a certain date, I'm going to disinvest a certain company. So otherwise, there's always a case of saying, am I getting the right valuation? The market value will be different. We have seen the Sensex reach 60,000, fell again. It seems to be going up. We really don't know in March what the Sensex will be. Let's assume that the Sensex comes down to 50,000 for some reason. I mean, at that point of time, I don't think that disinvestment will go through, because the kind of valuation which we have for LIC, which is a very good number, I think that's not something which the market may be prepared for. So I think disinvestment is always going to be a tricky issue. In terms of asset monetization, I think we should remember one thing, that whatever monetization takes place goes to the company and may not come into the budget. I think that may be a technical thing.
Yes.
Mr. Gopalan can actually throw light on it. So it's actually not going to help the budget, because if NTPC is able to sell something, it will go to NTPC. Maybe it'll have to borrow less from the market, but it's not going to help our budgetary numbers. So I think that's the major problem with disinvestment. Ideally, I think disinvestment should not be a part of the budget. You should keep it outside the budget, so that if at all it takes place or doesn't take place, it wouldn't really matter, and these numbers don't go topsy-turvy. And for this year, I think the major success for the government definitely has been Air India. Even though I think it has been sold at a low price, but I think everybody's happy because government wanted to get rid of it. You managed to get rid of it. Tata's wanted it, so they got it at a good price. So it's been a win-win situation. But a similar kind of a story is not going to play out for LIC, because LIC is a great company. It's a large company and probably one of the most valued companies, public sector companies. So it's always going to be something which will carry on. But I'll go back to saying that we should not be having disinvestment as part of the budget, because when you're talking about 1.75 lakh crores, I think the last numbers which came out show we haven't even, 1,60,000 crores is pending. Because a lot of these things, that is also merged with ideology. Two public sector banks are there. Now, we're not quite sure if you're in a position to actually sell those two public sector banks. So until we're able to crack that ideology, only then can we say we can bring it to the market or get somebody to buy it. So keep it out of the budget. I think we'll have a more realistic budget in that case.
A more realistic budget. Mr. Gopalan, I'll let you have the final word on the show, and I hark back to the point about no instant budgets for the Modi government, certainly no budgets which are very populist. It's always been a sort of middle path approach. Given all of that and your own sense of how the numbers are likely to add up, how would you summarize this budget? Not a budget where there is instant giveaways, and not also a budget which completely remains conservative and doesn't spend to shore up the economy?
Siddharth, I've been seeing the Modi government budgets. They are definitely have a little left-leaning tilt. They do. If you look at the PM Kisan program and those kind of things, I've seen that happen. They have been trying to ensure that the existing programs are implemented well through your, Kisan Yojana and your insurance schemes and those kind of things. They're trying to improve them. See, what I would like them to do also is that you have to create institutions or create an institutional structure, or you have to ensure that institutions are, that are created by some, advancement, some enhancement of your policy initiatives. For instance, if you find that the perishables are not getting marketed in the urban centers, then why not look at a Amul type of a structure to ensure that these perishables are collected and then sold in the markets where the demand is there. So this is a policy initiative which has got to be taken from the budget to ensure that such institutions are created. So it's not something which can come just drop from the heaven. The point about asset monetization, I agree with Madan. The money will go to the organization. It will not come to the government, certainly. But if they create a separate organization, then that organization will be making profits, obviously, and that profit, the dividends can come to the government by way of revenue. Otherwise, selling these assets will go to the institution only. Now, this budget, I don't expect, big bang kind of issues. I expect the same prudence with which the fiscal deficits and other funding, the finances are handled so far. It will be done in that particular manner. I don't think it's going to be something very, very big bang. Focus once again will be on capital expenditure from 5.5 lakh crores, maybe 6.5, 7 lakh crores. There is a limit up to which the administrative system can absorb and implement in the economy.
Right.
That will be kept in mind when you look at, capital expenditure increase in the budget. That will be kept in mind clearly. And obviously, you may get some inducement to ensure that exports are, done well to take advantage of at this point in time. There could be some programs which I'm expecting. What I'm learning, but that apart, I don't expect any big bang or a path-breaking kind of an announcement coming up in this particular budget. Just to manage them in such a way that the debt levels do not go up beyond the existing whatever 100% or whatever we are talking of. It doesn't go beyond that. So those are the kind of numbers I think the government will be looking into. Very, very conservative way of looking at, but that's good for the economy in the long run. That's what I think the budget is going to.
Absolutely, and we would also wish that this budget addresses all the crucial needs of the economy and the evolving situation on account of the third wave. But as far as the macroeconomic numbers are concerned, this year has been pretty decent, and we can hope that things get sorted out very, very quickly. I'm going to thank all of you, Kaushik Das, Madan Sabnavis and R Gopalan, for your time with us today. With that, it's a wrap on this pre-budget special on Business Today television. If you've been, thank you very much for watching.
If you like the video, do like, comment, share and subscribe.